Good day, and welcome back to another episode of The High Ground, powered by Premier Companies. And today, back again, my name is Sal. I'm with Ryan Priest, Chief Operating Officer of Premier Ag. And with us today, we also have Aaron Bledsoe. Back again.
Oh, yeah, back again.
And recent events, we just had do we have a crop report just come out?
We did, yeah. We had it come out on Wednesday, the 12th. It should have been a firework maker, but it ended up being kind of a dud.
That's disappointing. You expect they really went all out, right? And then you show up and nothing.
Yeah, for a January report, it was a little unsettling to see nothing really come out of it. There's definitely some details to pull out of it. It's just a lot of people thought we'd see some big swings or big reductions, and we just didn't see either of them for the most part. It came out where net, we're still in the same position that we kind of thought we were to begin with.
So we think that it was kind of a dud, or was there something in there you thought we might see that we didn't?
I think a lot of people thought that eventually we would see the export number for beans drop. And I'm still saying that number needs to fall back. We're really running short on time to make up for our advantage. The export number really needs to drop at some point.
Okay.
Because the window of time for us to send our beans over to China to be the most advantageous for them to buy from us is really shortening. The Brazil crop is getting ready to start hitting the export market, and when that happens, we no longer become the favorite in the marketplace globally for beans. And for the USDA to keep the export number the same as what they did from December and November, I have a hard time believing that. We're behind pace of what we were last year, and yet the export number is rough. It's in the same ballpark as what we did last year, and we're not even close to that as far as shipments to date. So I think that was the one thing that a lot of people were thinking they would see some kind of trimming effect on it, and they just didn't see it. They did bump up for corn for the most part. They bumped up usage for ethanol, feed, primarily dextrose and like glucose for food products. They bumped that number up quite a bit, and they kept the ethanol up, which that plays into the oil demand being up, and oil prices, and the U.S. dollar also seeing a little bit of a trimming in the last month or so. So that's playing into corn's favor right now. They did drop back the export number, but net total usage actually went up 5 million bushels. Yeah.
Global usage, or I mean that's United States.
That was the United States, yeah.
And that was a glucose and feed and just
dextrose, yeah, and ethanol.
Dextrose.
Yep. So
glucose is in sports drinks, right, Ryan? That's in your Gatorade.
That's in my Gatorade.
Okay.
Well, first I want to congratulate all of the Premier customers and Indiana farmers out there, because you guys produced a record crop, corn and beans. Corn came in at 195 projected yield for a record for us.
Wow.
Beans came in at 59.5 bushels the acre. So we knew we had a good crop here in Indiana. I know there were some spots where it was a little bit tougher for some people. And I think around the Bedford area locally, there was a couple of tougher acres for them. It seemed like they caught the rain when other people did, and it just really slowed them down. But overall, it's a big congratulations for the Indiana farmers.
That's just a number I never dreamed it would be an average.
Mm-hmm.
And there's a lot of there's a lot of zeros in there from the wet holes. When we find out how big the wet holes are after these 4 and 5 inch rains, and they're bigger than we thought they were.
Oh yeah, yep. And to stick with the record, I'm going to go ahead and start with corn. Beans global or nationally also had a record yield, but corn overall, they stuck with the 177 record yield for the nation. The one little tidbit one little surprise was that they upped the area harvested by 0.3 million acres. So that's 300,000 acres actually went up in the harvestable acres for corn. That's at 85.4 versus 85.1 is what they said back in December. So that brings total production up 53 million bushels. They did tweak the food, seed, and industrial side, so that's where your dextrose and your ethanol comes from. They upped that usage 80 million bushels.
Wow.
So that can be attributed to the strong fuel demand that we have right now. When the oil market goes up like it has, that plays into blending capabilities because it makes it more advantageous to blend ethanol at that point. We have seen in the last couple of weeks here where ethanol surplus has started to rise a little bit more than what it had in the past month or so. So you've seen a little bit of pressure in the market right there. But in this report alone, which was up until January 1st, we saw ethanol usage go up. So we saw an 80 million bushel increase on that domestic total use.
So are they hedging anything on the increased COVID cases that this fuel demand might drop back down? Are you seeing anything anywhere yet?
I'm not really seeing anything. I mean, if you look nationally, I mean, even locally, it feels like we're kind of racing more so under the green flag than we used to be just even 6 months ago. It feels like the consumer is kind of over this, and we just want to get back to rolling. I think the big part in the ethanol usage or the fuel usage is going to be this inflation number. If we can't get that inflation number under control, I think consumers at some point will probably dial back their consumption. I mean, a dollar only goes so far, and at some point you got to start trimming.
That's a good point.
It's a simple concept, but a hard concept for some people to understand.
Yep. Exports, they dropped that 75 million bushels. That's not a big surprise. I think everyone in the market, the trade estimates, thought that they were going to do that. Just last year we had a record as far as moving bushels out. I mean, very seldom do you see that amount of bushels moved out of this country, and last year was phenomenal for that. It was hard to keep pace with that again, so they dialed that number back, especially whenever you start talking $6, $7 corn. It's really tough to move bushels outward. And Brazil's second crop is going to be their largest exporter crop, which that won't really hit until the summertime. So our window of time for moving corn bushels out starting to shrink a little bit on that front too, which that's not our big usage. Exports is not the main reason why corn goes up or down for the most part.
It helps. So, I mean, it's, it goes somewhere. So how do you recreate that export, even though it may not be the main driver? What happened? What was the anomaly that happened with the exports last year?
So the anomaly was the safrinha corn, or the second crop corn down in Brazil last year. They really, really struggled. It took a big hit. The second crop is Brazil's largest exported crop. So when that takes a hit, all of a sudden Brazil can't send it out to other nations, and they start looking for other sources, which is us. And at that time, so we kind of had like a perfect storm brewing for us for exports. At that point, we were still having 350 corn. I mean, it wasn't long. I mean, this time last year, we were in that 350 corn range, and all of a sudden, the safrinha corn starts looking rough, and all of a sudden, we start being a bargain buy. Well, it was a bargain buy for somebody, but at some point, all those bushels started getting taken off our balance sheet. So then you get into the summertime when bushels typically get a little harder to get because most people have emptied some of their bins, or at least 75% of them. All of a sudden you start having to paying up. Well, the market starts working harder and harder and harder to buy those bushels, and then we started to see those prices rise in that summertime last year. So it was kind of a perfect storm. You love exports. We always export some corn, but it's not our main driver. Ethanol has been the big driver. And so when COVID came in and we saw trucks get just locked down and people not driving, that really put pressure on this market. I think the big thing out of this also was that the estimates were fairly close to what the USDA came out at. Total production, when you have an estimate that's a little bit further off than what the production is, that's when you start seeing fireworks. Well, the report came in at 15.1 billion bushel production for corn, and the estimate was 15.069. I mean, you're splitting hairs there.
Yeah.
So the trade pretty well already factored in a pretty big crop with a 177. I think the harvested acres going up kind of shook it a little bit, but it was still fairly close. The ending stocks, that's the one that we kind of always want to watch, because that plays into our stocks to use rate. So anytime we get below a 10% on corn, that's when we get uncomfortable. So that stocks to use rate is just the ending stocks divided by what our production was. So our ending stocks are projecting a 1.485 or a 1.54. Sorry, the 1.485 was the estimate. Again, the stocks came a little higher than what the estimate was. So we saw a little bit of trim on the market the other day. But the stocks to use rate projected right now for the 21-22 crop, which we just got done harvesting, is 10.2%. So the market feels like
Steady.
It's steady. We've got enough, but we don't have really any room to falter any at all. To put that in perspective, last year we were 8.7%. And then in 1920, when we were talking about 3-something corn, 14.1% stocks to use rate. So you can see how when it drops down below that 10%, we really see those prices start to work hard to buy acres to get those bushels in the pipeline. And then when we see it get to around 10 or higher, we start to see that board start to back off a little bit.
Okay, interesting.
Globally, the stocks, this is still national, grain stocks. So grain stocks, when they pump this number out, it's looking from December of last year, of December 20, versus December of 21. And so grain stocks is on farm and off farm stored bushels. So corn is up 3% versus last year. And so the difference here would be last year we used about 4.74 billion bushels disappeared somehow, between December of 19 to December of 20, 4.74. In that harvest, sorry about that. The disappearance of 4.74 billion bushels disappeared somewhere in harvest time, from when we started to when we finished at the end of December. That was last year. This year, 4.70. So we're using roughly the same amount as we had last year. That's why we're not seeing this price, really falter or gain a whole lot versus what we were last year. We're just kind of sitting here. We're not doing a whole lot because exports, usage, net, just like the report said, total, we only had a 5 million bushel increase. That's not something that's going to be a whole market changer. So the grain stocks use and the stocks to use rate, the grain stocks, those are all numbers to key in on because that kind of tells you your usage rate, and that's really what plays into the supply and demand, obviously. It just goes back to fundamentals for me.
So it feels like they're telling us that things are consistent. We're getting a fairly nice ride here. It's pretty smooth, but a production error of some kind, a drought, something along that line is a trigger.
Yep.
But it's a trigger up from a 550 corn market. What's our triggers down? Well, if we had record crops and we're still seeing this, our uses are close to what we're producing. We see an opportunity for the market to jump if we were short supply due to a production problem. What's causing it to go down? What would cause it to go down?
So to go down, you're talking about consumers with the inflation rate not driving as much, ethanol surplus jumping up, the blend rate going down because you're just you don't need as much corn when you have a surplus of ethanol sitting there and it just keeps piling up. It just doesn't make sense. Why would you keep making something that you have a lot of? From the supply and demand standpoint, it makes sense.
Well, I tell you, it's Ryan. My head went the same place you went. Was that if we're sitting here kind of static after a record crop, that it seems like that's kind of building in another record crop in advance. So I'd say that this is almost, probably be kind of bullish because I sure don't see, I guess inflation could play a part of it, but I'll tell you a little personal story. My family I didn't go on this trip, thank goodness, because they got stuck in Colorado and couldn't get back with the canceled flights. And some of the personal testimonials I was hearing was that if it's less than 10 hours, we're driving.
Yeah.
And I think the people's going to be avoiding the airlines just due to the cancellations.
Oh, yeah.
And probably driving a lot farther.
Yeah, I would say with the markets where they're at, primarily corn right now. So I'm just going to stick with corn because I got a little different feeling for beans than I do for corn. Corn, I think we have time to where we could possibly see this thing run up a little bit higher than where we are right now. To make it go down, like I said, you're going to have to see consumers start to dial back on how much they're using oil, not driving as much. You're going to have to see the feed number go down a little bit because corn's just too expensive to feed cattle. If you start seeing packer plants start backing up again, you start seeing feedlots not using as much, you're going to put pressure on the corn market. If the U.S. dollar starts to go up in value again, you're going to see a little bit of pressure on corn again because then the export number has to get trimmed a little bit more because it's more expensive to buy our corn. On the bullish side, or pushing this market higher, Brazil's a little dry right now. We're not planting the second crop corn yet down there, the safrinha corn. If we have an issue planting that crop, then all of a sudden we have the bushels that people need. So you start to see our bushels become a premium to get. So if we have a problem with the second crop down there, they'll start coming to us, push this market up. If we see oil usage stay up, like you just said, Sal, if people don't want to deal with the airlines because of all the cancellations and they drive, you'll see this run up again too. So corn, I think we have time. Now there's an old crop bushel that we got to talk about versus a new crop bushel we got to talk about. But overall, I think we have time to play this corn market out. Old crop bushel wise, though, I have a hard time not telling farmers or growers to take advantage of some of the prices right now.
Yeah, I think this is it's I'll sound like Yogi Berra, but you can't go broke making money, right?
Yeah, and this old crop was planted and harvested with inputs that are not at the levels they are right now. So old crop, I think we need to be looking at, I think you could be a little bit more aggressive with, or a little bit more, I say aggressive, but you could probably wait a little bit longer, maybe get into that spring time frame where we usually do see a bump, or that summer time frame, just because people are planting. If your operation is set up to where you can deliver those bushels, that's a good window of time to take advantage of it. New crop, I would still be feathering in sales right now. I always like getting, everyone's a little different, but I like getting close or working towards being 25% sold on new crop before you put that first seed in the ground. You take some risk off the table, especially if you just prepaid or you locked in some inputs and these numbers make you a little bit of money right now. I would definitely be looking into locking some prices in, because like you just said, you can't go broke if you're making a little bit of money. And the last thing we want to see is for a big second crop down in Brazil, the U.S. dollar gets stronger, ethanol start to back off. We don't want to see that, because then we'll see the board start to trim. Or if we see corn acres not shift much and we still plant 94 million acres of corn, we're going to see this get dialed back a little bit, I think. So I don't want people to lose profit that they could possibly lock in right now.
Well, you said you had different thoughts on beans.
Yeah.
What do you have?
So beans, as far as how the report came out, they dropped the area harvested down about 100,000 acres. Not a big shocker there or anything to really write home about. The yield, they bumped up 0.2 to 51.4. Again, that's a record for us here in the United States. So production went up 10 million bushels, still at 4.4 billion bushels of production. The exports, I'll get to that in a minute. I have my own opinion on that, regardless of what the USDA says. Residual use or total was up about 1 million bushels. Ending stocks up 10 million bushels to 350 million bushels. Not a whole lot in this report for beans. I mean, production went up. Wasn't a big shocker. We knew we planted some pretty good beans, and we knew we got that done. The export number, I still think that number has to be trimmed. I don't feel good about us saying that we're going to export, 2 billion bushels at this point in the game. We're not at the same pace we were last year, not even close, of sending beans out. I know everyone's still talking about China still sniffing around every once in a while, and we got to get to where the Brazil bushels are rolling into the pipeline to get to China, but our window of opportunity is really shrinking here. So I think they have to.
We're talking
dial
like
that.
Weeks?
Yeah, we're talking weeks
Yes.
before the Brazil crop really starts hitting the pipeline. There's a lot of people out there with different theories on it, but we also our trade deal just expired at the first of the year. There's really no talks of how that's going or where any game plan on that, as far as I've heard.
Silence. Crickets.
Yeah, and that's what's kind of scary. We've shown where we can go from fairly tight stocks on beans to a lot of beans to not very many beans, so we can swell this bean number, ending stock number, up really high really quickly if we produce a bunch of beans this coming year. The stocks to use rate, we're still tight. That's why we're holding prices kind of where they're at. We're at a 7.9% stocks to use rate versus a 6.1 last year. So that at 1920, that was a 14.8%. So we went from 14.8 down to 6, and we've dialed it back up to close to 8. And nothing really changed a whole lot from last year.
But again, those are both the corn and the beans are with record crops.
Yep.
So this could be a situation where no news is kind of good news.
It is, yeah. I mean, with these markets, corn and beans both at these price levels, we're kind of on tipping edges here. So no news is good news. We just had a record crop, and we're still talking really good prices. So that is good news. I mean, I don't want to sound like a broken record or a bad news bears up here. This is a great opportunity for a record crop to get sold at really, really good prices and to make some money for farmers. So this is a great opportunity. New crop's a little different, but old crop, corn and beans, this is setting up really, really well for people, and this is a great opportunity to take care of some of your financial needs. Grain stocks, and this is where I'm a little nervous on the export number for beans. Grain stocks, again, that's on-farm, off-farm storage, up 7% from last year, and a disappearance, it's down 14% versus what it was last year. 14% is a lot of bushels.
Yeah,
That's a lot of bushels.
That's 90 million bushels that we just haven't moved at this point versus what we had moved last year.
And it's sitting somewhere.
It's sitting in the bins, either on farm or off farm. Both on farm and off farm. Both saw increased in the stocks being held in bins, ground storage, however you want to hold your beans. So again, old crop versus new crop. Old crop, we're seeing pressure. Well, old crop for corn and beans, we're seeing pressure on the basis right now. We turned over to a new year, new income tax year. Most people are flooding the markets because now we can start collecting some of that money. It's not showing on 21's income, so starting over. This is typical. We see basis get hit hard. We see a little pressure on the market right now. It's the seasonality of it. Still, we're talking $13-some beans with a record crop.
Let's go drive trucks.
That's exactly right.
Yeah.
That's exactly right. Get in your truck, start hauling beans, find the best that you can to get what you can for them. New crop, I would be extremely aggressive on pricing some new crop beans, because if we see an acre shift, which I'm going to ask you a question in a minute on that, Sal.
This is better if you don't ask me questions.
I think it was perfect that you directed that to you, though. I'm anxiously awaiting myself.
But if we see an acre shift, which is what everybody's talking about, so we, like I said earlier, we've got old crop bushels we got to talk about, new crop bushels we got to talk about. But to stick with the new crop for a moment, if we see a bean acre shift and we see bean acres go up, which we've always talked about it. I mean, every single year we talk about swapping to a cheaper production acre, which is beans. If we see that acre shift, we're going to see these futures get pressured lower. Brazil still projected a really good crop. It's not a record like what they had initially talked about. Still a really good crop. They're still going to export quite a bushel of beans for beans. So if we see an acre shift, we're going to see this bean market really take pressure for that fall delivery period. So I'm kind of curious as to what your thoughts are, Sal. If you've heard from the account managers, if we've seen anything from the seed sales or any of that as kind of a shift from corn to beans.
Well, I'll tell you my thoughts, and you are correct, Aaron. We always think, and it always feels like we're at the edge of a big shift, that the market's going to drive something with less inputs, and certainly nitrogen being the wild card this year. I'll tell you what I've heard is that other than some very marginal ground, other than some outlier issues that we become a market of one, right? Everyone's got their own situations. So if we take out the outliers, I really don't feel like it's going to be anything bigger than 5%. Mm-hmm. I mean, and that would be huge.
Yeah.
Now, it may show me wrong, but But right now, with the feedback I'm getting, I do not think we're going to step out of the rotation we're in. It seems like, we have discussed, it goes back to the same thing about getting rid of marginal ground, or we talk about it, but it never really happens. I don't think that we're going to see a big shift in acres. It really doesn't feel that way, but that's not the feedback I'm getting so far.
There were no triggers like extra wheat planted this year. It didn't feel like in this area anyway. I don't know if you're hearing that anywhere nationwide, that there were maybe some wheat acres planted that we weren't used to seeing.
No, not at all. And that would be the first indicator, because we're far enough south down here in southern Indiana that we can grow really good double crop beans and really good wheat. And so, but none of that happened. And so I don't think we're going to get out of our rotation by much.
Okay. Well, that's kind of what I've been hearing a little bit. I mean, I've heard the one-offs.
So you knew the answer before you asked
No,
me.
not really. I
Thank God.
I really don't know any answers. This is all just kind of looking at some numbers and coming up with an idea. There's no answers in this one.
We'll have to revisit our guest contract that says you're not allowed to ask questions to the host. I don't know. You signed off on that, I'm positive.
Yeah. But no, I was really curious, because you hear whispers, but guys like planting corn, and guys like sticking with the rotation, and I feel like we've seen that the last 3 years. We've been talking about big acre shifts, like, oh my gosh, we're going to see it. I mean, in 19 with all the rain, we thought we were going to see a bunch of beans, and we did see some bean acres go up a little bit, but it wasn't any. We still produced corn.
That's a good example. Yeah.
And last year we thought that we were going to see a big number for corn, and we see it's a big number, but it's not a drastic number like 97 million acres of corn. So I feel like people are sticking with the rotations. There are going to be some acres shift, especially if we have some kind of weather issue, and if we have any kind of input issue. I mean, I know Premier, we're sitting great to provide our customers with what they need, but for those acres out in North Dakota that they may have a hard time or something, that may make an acre shift. I mean, if they can't get what they need to plant corn, will they plant beans? I think that's the biggest question, and that's why this is such a crazy thing. If we just talk old crop, man, it's sunshine and roses right now. I mean, you had a record crop and you're getting $6 corn and 13-something beans.
Yeah.
Gosh, you might as well just kill me, send me to heaven, because this is nice, But if you start talking new crop, that's where I get a little bit more nervous. And I think I let the new crop idea or mentality get to me a little bit more. So sometimes I feel a little bit more like a Debbie Downer, wanna.
Well, you've got to take all that, all right? But that goes into our decision making. You have to, if you don't look at the upside and downside, you're not. You can't do your equation.
Yeah.
So you wanted corn you're saying to sell new crop at 25% before the first seed hits the ground in corn, and you said be aggressive on beans. What kind of percentage you thinking?
Everyone's a little different, but corn, in a normal year, I'd be saying corn and beans both start working towards being 25% sold before the planter rolls. And then once the planter gets going and then you get into that June time frame, July, start looking at being 50% sold on new crop. This year, with the way the markets kind of look, to me, it feels like we could be a little bit more relaxed on corn. Potentially. I mean, we need to always be watching it and staying up on it. So, if you get to 10%, 15, 20%, that's good. Just have some kind of structured plan working towards that. Beans, depending on your operation, I'm not sure I would grumble at somebody getting closer to 30, 35, maybe starting to push 40%, especially if they've been especially if they've set some pretty high targets and we've allowed this thing to work in the next month or so to come up and smack some really good targets. I wouldn't be upset about being close to 30, 40% sold on beans. Because I ran some numbers, even at high cost per acres, we're still talking over $100 profit for beans.
It's pretty good money.
I think that was a 50 or 55, I have to go back and look, yield per acre. So beans look great right now. So even if you only produce 25 to 50% of your average yield, you're making good money on that. And then you probably have an insurance program running in the background to make up for anything that you possibly didn't make.
Yeah.
But that doesn't get you overextended either. I mean, even in 12, we still produced a 25% of a crop. So, and then the insurance program's really paid out on that one.
Yeah.
To help us out on the backside. So
future looks bright.
It does look bright. It does look bright. As far as where the markets are right this second, March beans, the high was back in June of 21 at 14.50. Right now we're at 13.77. I mean, just a couple days ago we were in the 13.90s. So we're within 60 to 80 cent range of hitting the highs. And if you look at the graphs, we've definitely, once we hit that high back in June, we dropped back off. We're right back up there now. We've still got some room to make up, but we're in the upper third of where this contract has traded. So that's telling me that we're in a really good area to be selling some bushels from a first glance of the March contract.
It's been a mild January so far. There's no reason not to be running some trucks and getting some bins cleaned out.
Yep. And so March corn, sticking with the old crop, the high for the March 22 contract was 640. And that was back in May. Right now we're at 590. So the March corn contract still has some room to make up, or it could make up, to get up to that 640 high back in May of 21. That May area was also when we really got rolling. I mean, exports were just flying off the shelves out of our ports. We didn't have any logistical issues. We were pumping it out. We had sales going left and right. So old crop corn, if you look at the graph, that 640 was really high. 590, I still feel like we're in the top, top third of what this contract has traded. I'm not bashful about pulling the trigger, but I still think we have a little bit of time. If you give it another month, we might see a basis improve a little bit. Maybe a couple little bullish reports here and there, and we can get back up to that 620 range on the March contract.
When in doubt, 590 doesn't look bad.
No, not at all.
Yeah, 590 does not look bad at all. I think it's a really good day, and neither does 1390s for beans. I mean, they both look great for old crop. New crop beans, the high for Nove we're at the high. I mean, we're right there. I mean, we're kissing it right now. I mean, we're right there for the Nove contract. So that's why I'm a little bit more aggressive on beans, selling new crop beans, because we're pushing the upper limits of it.
The new crop is what?
$13.
$13
is what the big contract on the Chicago Board of Trade is trading right now. So, local basis anywhere from, with basis factored in, you're probably talking somewhere, depending on who you're going to, somewhere between a $12.30 to a $12.70 cash price for new crop beans. I just have a really hard time passing that up on some production for new crop.
And certainly locking in 25%.
Oh, yeah. I would be working very hard on beans to get to that. Yep, very hard on that. The new crop corn, 570s was the high, and that was at the end of December 2021, or the end of November 21, beginning of December 21. We're at 560 right now. So we're right there again. This is another one for new crop where I'd be feathering in some sales. I wouldn't be as hard pressed to get some beans locked in. I'd be a little bit more aggressive with my targets. Maybe put in something 20, 30 cents above where the market's at right this second for corn. For new crop beans, I probably wouldn't be as aggressive. But beans can swing. I mean, that's what's so different about these markets. These markets are so volatile right now. I mean, you guys remember just back in 2018, a big day was a swing of 10 cents.
Yeah. 7.
One way or the other.
Yeah.
I mean, 5 up, 5 down. That was a big trading
We watched
day.
the DTNs all day for 4 or 5 cents.
Oh, my gosh, yeah. And now it's like, we moved 60 cents today. I guess that was kind of a slow day. It's just exhausting to try to watch this stuff. That's why these targets, in my opinion right now, get these in, have them sit there. They're free. They have the basis built into them. You end up with a fixed price contract at the end of it for cash, future delivery, fall.
And for clarity, all I have to do, it's as easy as this, right? I call you, I call one of our facilities, I put a target in, I make a thoughtful decision that says, if it's at this number, I am good with 20,000 bushels or 10,000 bushels or put the number out there.
Yep.
And then I don't have to worry about it.
That's exactly right. The market trades 17 and a half hours a day. So if you call any of us, Jason, myself, or any other locations, put a target in. That market's trading 17 and a half hours a day. That target is working for you. You can go to sleep. If it hits it on the overnight, which we just had one the other day hit on the overnight, and I got to send the text saying, hey, you sold.
Congratulations.
Yeah, congratulations. It hit. And the response I got was, well, maybe I should have pulled it and let it go higher. Well, it barely hit it, and then it retreated, and then it was like, oh, okay, good.
Yeah.
So that was a prime example of where these targets, you don't know when they're going to hit.
But put it in.
But put them in. Let them work. I mean, it just gives you something to kind of go off of. It
We
takes
may,
the emotional side out.
We might even put something on social media just to reinforce how easy it is to put a target in and let it happen, you know, and be pleasantly surprised.
Yep. Yeah, and right now in the cash market, at least regionally where I'm at over in Lagodi, even down to the river on the Ohio side, and even west of me, getting over towards the Illinois side, we're seeing pressure on basis for corn and beans.
Wow.
Which, again, seasonality of it, everyone's starting to deliver, especially at these prices. Can't blame them. I would deliver them too if I had my own personal farm bushels. I'd be delivering right now.
Yeah, we're usually dealing with load limits and everything else right now. I mean, you can run. You can go.
Yep.
I assume they're not in place. I've
Nope.
been out of town
Nope.
for a
No
week.
load limits. The only limits are the actual facilities are starting to say, yeah, we're going to start cutting corn off at noon, or we're going to start cutting corn off at 2, or we're going to close down Tuesdays and Thursdays because the pipeline's starting to back up just because we're getting that big push of January corn and beans. So just be mindful of that.
Do we have any restrictions on at our facilities?
At Lagodi, I shut it down to contract corn only, and some of that is because I can't get it out to some of the places I have it sold to right now because they're backing up. So
That's Lagodi grain, not the feed mill.
no,
Just to
Lagodi
clarify.
grain. The Lagodi mill right now is contract only as well, but that's typical.
That's the way it should be.
Yeah.
Good. Yeah. Okay.
But beans, keep them rolling. We're open. I mean, 8 to 5 every single day over in Lagodi. We've got space for them, and we'd love to talk to you.
You know, and that becomes that's an important component. I hear the horror stories of sitting in grain lines, and at some point that's got to factor into where you take your grain. I mean, the ease and convenience and speed, that's a huge plate.
Yep.
You know, an economist would make that, they would put that in their decision making every time. Like, I could be doing something else with that hour and a half.
Yep. And what's nice about all of our locations, it's not like you have to schedule a time slot to come into us, and you don't have the wait time. You don't have the 4-hour wait times like some of these places are. I mean, that river system, you're starting to get into 2-hour wait times. You roll across our scales, you're in and out 10, 15 minutes. Now, that's a slow day.
That's awesome.
Yeah.
Good.
But I mean, if you guys got any questions, by all means, shoot them at me. I mean, I'm here.
I'm good for this one.
I am too.
We want to make this monthly report a deal on here to where we get your analysis and breakdown on those every month. So I don't think I have anything else, Sal.
I don't either.
Yeah.
Well, Eric, thank you very much for joining us again. And Ryan, this concludes another episode of the High Ground, powered by Premier Companies. So thanks for all our listeners. Thanks for listening.